Hello, Andrew Pang here. Welcome to another edition of CMS Forex News. Today's Thursday, October 16th, 2008. The tail end of yesterday's U.S. session saw U.S. stocks plummet to a sharp loss, with the Dow Jones Index falling more than 700 points for the day. That carried over to the Asian session, where the Nikkei 225 index fell 11.4% for the day, with most of the declines coming within the first hour of trading. The increase in risk aversion favors the yen, which gained against its rivals. The pound yen swung 700 pips from noon New York time to 1 hour after the Japanese Open. It did, however, manage to recover from that low and pared most of its earlier losses as U.S. stocks were up late in the New York session. In Switzerland, the pace of annual retail sales was flat for August, which is a steep drop-off from the 6.2% seen in July. Consumers spend less on clothing and personal goods as the economic outlook turned weaker. The ZEW measure of investor expectations dropped to negative 91.1 for October as the financial crisis has unfolded recently and dominated headlines. Expectations are for unemployment to go up and that the SNB will respond by further lowering interest rates. The Euro-Swiss franc pair saw similar risk aversion, though it carried through with its declines in New York trading. From yesterday's intraday high near 1.55, the pair fell to 1.5140, a swing of 340 pips. Stocks in Europe were mostly negative, with a steep fall in later trading, as recession fears outweighed more moves from central banks to stem the financial crisis. In the U.S., consumer prices were flat in September on a monthly basis, with core prices, which exclude food and energy, increasing a smaller than expected 0.1%. In annual terms, prices decreased for a third month, cooling to 4.8%. Price pressures are declining as a result of falling oil prices and a slowing economy. The number of U.S. workers filing new claims for unemployment benefits fell a second straight week. Claims were down 16,000 and came in lower than expectations. Still, numbers above 450,000 means the economy is shedding jobs, and total continuing claims rose to 3.71 million. Output at U.S. factories fell by 2.8% in September, and the industrial capacity utilization rate decreased to 76.4%. The 2.8% decline is the deepest fall in nearly 34 years, though Hurricanes Gustav and Ike and a strike at Boeing, a major producer of civilian aircraft, severely curtailed output. In another piece of poor news, the Philly Fed index plunged negative 37.5 for October, the steepest one-month fall in the index's history. New orders, shipments, and employment all turned deeply negative, though price pressures seemed to ease. The euro-dollar pair continued its slide seen yesterday and the latter half of Tuesday's trading. It found support near the 1.3350 level and recovered in overnight trading, only to fall again during the New York session. Despite the weaker data from the U.S., it seems concerns over the safe haven and worries about European recession are pressuring the euro. The dollar-yen pair recovered from its low below the 100 level in the wake of the drop in Asian stocks. Overnight, the pair climbed about 170 pips before stalling near 101.40. U.S. stocks fell in morning trading but recovered in the early afternoon, and the dollar held most of its gains from today's rally. Oil prices, meanwhile, fell below $70 a barrel. The U.S. dollar-South African rand pair had its largest rally since 1994, then retreated after hitting a 6-year high. Investors believe the sell-off of the rand may have been exaggerated, though after finding support near 9.83, the pair resumed its uptrend and rose to 10.48 by 2:30 p.m. Eastern. Tonight, Japan posts its index of economic activity, and Australia releases its quarterly import prices. Overnight, the Eurozone reviews its trade balance. Tomorrow, the week ends with the U.S. data on building permits, housing starts, and consumer confidence. And that's it for today's Forex News. Please join us again tomorrow right here at cmsfx.com.